Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting by looking at this latest impulsive structure to the upside in combination with the volume, because what we're looking for here is a wave 1, 2, 1, 2 in between these trend lines. Then we have the explosive wave 3, and eventually what we're going to be looking for is a couple of 4, 5, 4, 5, 4, 5s before then a bigger retracement to the downside. And once we enter this grinding stage towards the upside, typically you want to see volume moving to the downside as well. Now, what is interesting about volume is that in the 1, 2, 1, 2 area here, volume was pretty much neutral, couple of high peaks, but then we have this wave 3, and most commonly wave 3 is the most explosive, most extended, highest volume wave. But here you can see so far the volume is quite low, and that is actually quite normal when you think about where we are on the chart. If I open the medium time frame bullish scenario that I explained in more detail in the previous video, we are looking for a couple of 4, 5s on the higher time frame. We have a 4 here, looking for a 5, then a 4, and then a 5, and then a bigger retracement to the downside. So the fact that volume struggles to move with price towards the upside is clearly showing a little bit of exhaustion in the impulse that we have from 24K to where we are at the moment. So therefore the resistance areas become very interesting to take a look at. And the first resistance area that I have here, the golden target box, is sitting between 42.9K and 43.6K, and in this area specifically we have the weekly naked point of control at 43.450. That is my most important area in this target box. Then we have another gold one here, 45.2K to 46K, and then the blue one, 47.2 to 47.5K. Now, if you then put the numbers on the chart over here of this latest impulsive structure to the upside, then we're looking for this being a wave 1, wave 2, working on that wave 3 to the upside. Now, a wave 3 can extend quite far. The 1.618 is usually a minimum target for a wave 3, which is currently what we're ranging on top of, right? Usually around the 1.618 you do get a bit of a range just below or just above, but if it then eventually moves to the upside, we can be looking for 2 at 42.3K and a 2.618 at 44.1K. Eventually, we expect a wave 4, but before we get a wave 4 of this size, which should be quite similar to the wave 2 over here in time, we expect a couple of lower degree wave 4s, because here we then have a 1, 2, 1, 2, arguably more 1, 2s over here for then a wave 3. So we eventually already expect a bit of a 4, 5, 4, 5, 4, 5, maybe reach the golden target box before we then go into a bigger wave 4 rejection. But then again, it is quite difficult to really know when a wave 3 is going to end. We only know when a wave 3 is ending once we start forming a bigger range. Now, if we look at the sub-degree count of this yellow wave 3 to the upside, then we have to think about this white count. So the white count here is then a wave 1, 2, 3, 4, 5. In this case, in this scenario, wave 3 has now hit the 2.618, which is a trend-based fib extension taken from the low to the high of 1 to the low of this wave 2, which is a target for wave 3. And as you can see, we have a little bit of a reaction, which is good to see as well. Now, if we pass the 2.618, we can look for the 3, 42.7K, and the 3.618 at 43.8K. If price eventually moves into a bigger sideways range, which considering time is quite similar to this wave 2 here, then we can be looking of a white wave 4. We can be looking for the white wave 4 here, with currently the target being between 41K and 39.8K, with the fibs taken from the low of wave 2 to the current high that we have. As long as price is not forming a range at least quite similar to this wave 2, if not longer, we are simply gonna move these fibs to the upside with price making new highs as well. The invalidation for this scenario is if price is going to reach the 0.618 over here, because that is not a wave 4 target, and as it stands, there is no nice wave 4 in this move to the upside. This looks impulsive. So if price is going to do this, then the impulse over here, 1, 2, 3, 4, 5, is going to be invalidated, because for a wave 4, you don't want 39.2K to be hit. And in the other count here, the higher degree count, 1, 2, 3, 4, 5, the invalidation is a little bit lower, naturally, because I pulled it from this low instead of the higher low, from this yellow wave 2 to the current high that we have, where then the invalidation is 38.8K. Now, if we look at the more bearish, quote-unquote bearish scenario, right, we have to look for this ending diagonal where you then have a wave A, B, and a wave C. This is alternative as it stands. There's no reason yet to make this scenario a preferred scenario, but we always have to think about a bullish and a bearish scenario. And this would be, at the moment, a more bearish scenario because you expect a deeper retracement. So here, we're then looking for a 5-wave A to the upside. Another reason that I thought about this scenario is because the highest amount of volume in this wave A is actually in the high and not in this wave 3, which is quite interesting. So then we have this wave C extending to around the 1.618 trend-based fib extension taken from the low to the high of A to the low of B, which is a target for a wave C. It's a little less common, but it is a target for a wave C in a zigzag. So we're now just above that 1.618, but then we are looking for a deeper retracement. So if we are going to hit the impulsive wave 4 invalidations, then this is something to keep our eyes on, where the common target for a wave 2 in a ending diagonal is between the golden pocket and the 786, which is between 38.1k and 37k. Less common targets are the 382 and the 05 at 39.7k and 38.9k. After this wave 2, which then has to be a zigzag family structure, we are looking for another 3-wave move to the upside, because in an ending diagonal, all of the waves have to be zigzag family structures, either a simple, double, or a triple zigzag. If we then look at the CVD divergences, then locally we do have some bullish CVD divergences here. Of course, we had quite a move to the downside, but we have a higher low in price over here and a lower low on the yellow CVD. Also more locally here, higher low in price, lower low on the CVD, but preferably in my case, I would like to see a bigger range to form, and then eventually the CVD divergences will have a lot more impact than the short bit of price action that we have over here. This is a very short range at the moment. And if we look at the news, as we do have some news this week, then tomorrow on Tuesday, December 5th at 4 p.m. Central European time, we have some high impact news. So make sure you trade safe around these times. And also on Friday, the 8th, 2:30 p.m. Central European time, we also have high impact news, which might increase the volatility around that time. So make sure that you trade safe. If we now look at the probabilities of these different scenarios, then on the low time frame, the highest probability scenario is, as it stands, simply the bullish scenario, right, where we're looking for eventually wave 4 and 5s to form. So we need to be patient. We need to wait for price to show us the ranges. And once the ranges start to form, we know in what degree Elliott Wave is working, or in what degree Bitcoin currently is, right? Because we want to see time-wise ranges that are quite similar to its respective wave 2. So on the low time frame here, we're basically waiting for a wave 4 to form. And that's also what we're looking for on the micro. We're waiting for those wave 4s to come. So generally, we wait for a range to form, and then we will get more information about what is coming next. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.